Now, worries about the health of the Chinese economy have rattled stock markets across the world. The Dow Jones Industrial Average fell more than 500 points on Friday. That's the worst loss that US stocks have seen in 4 years. It was part of a global market sell-off, which also saw oil prices hit a 6-year low to under $40 a barrel. Technology companies, they were also hit with billions of dollars wiped off their value. All right, let's talk now to Yannick Naud. He's a financial analyst who joins us live from London. Now, markets are driven, as we know, by sentiment. So what has led to this big sell-off?
Well, I mean, it's fair to say that the main catalyst for the global sell-off this week in both developed market and emerging market was due to China. Obviously, the devaluation of the renminbi and the latest news concerning the slowdown of the manufacturing in China, I think the worst reading since 6 years and a half, did push at first commodities, oil, copper, and pretty much every commodity is down. And afterwards, most of the equity and currency market in the emerging market, and towards the end of the week, even developed market suffer quite a lot because of this global sell-off.
Why does a slowing down of manufacturing in China lead to such panic, if that's the right word to describe what we've seen in the markets this week?
Well, I think you're correct. It's only one reading. I think the attention is on China because so far this year, there have been many disappointing data, and there has been the stock performance has been first up and after sharply down. So the whole focus of the world is now on China to know if they will be able to grow at 7% that they're supposed to grow. Obviously, China is a very big economy, the second biggest economy, the first economy in terms of parity, of purchasing parity, but it's a big buyer of commodity. I mean, most of the increase of commodity price around 2011 was due to China. So it is very, very important. And during the summer, obviously, there's less liquidity because the stock market are less active, and therefore they are more prone to react to such bad news.
And, of course, the world is waiting for the Federal Reserve, the United States Central Bank, to raise interest rates. That was the indication given by Janet Yellen, possibly for September. Yes. Is that still the case, or will that intention also be changed as a consequence?
Yes, I mean, the last talk from Janet Yellen were pretty bullish in terms of increasing interest rate this year and potentially in September. You have to keep in mind that the job of the Federal Reserve is to look after the US economy. Obviously, if they raise interest rate, it will have negative impact on emerging market. But in fact, that's not exactly the remit of Janet Yellen. Janet Yellen have to do what is best for the US economy. And I would say that if we look at data in the US right now, I think it is, she can justify to increase interest rate on pure national statistics alone. Obviously, if the situation continues to deteriorate in China and in emerging market, and if we see further weakness in stock market, bond market, and currency market, it might prevent or delay this interest rate increase. And that's why we see, for example, this week the gold moving slightly higher, because some market participants are now thinking that the first interest rate increase could be delayed by a few months.
OK, Yannick Naud, thank you. Really good to get your thoughts.
Thank you.